Welcome to Tim and Julie Harris Superstar Interviews. We're joined today by Rick Sharga, Executive Vice President at AuctionCom. Rick is one of the country's most frequently quoted sources on real estate, mortgage, and foreclosure trends, and has appeared on numerous television and radio networks across the country. Rick has briefed government organizations such as the Federal Reserve and Senate Banking Committee, and corporations like J.P. Morgan Chase, Citibank, and Deutsche Bank on foreclosure trends, and done foreclosure training for leading real estate organizations such as RE/MAX, Prudential, and Keller Williams. Rick joins us today to discuss the recent announcement that Google Capital will be investing $50 million in Auction.com, and he's going to help us understand what this means for the future of this company, as well as explain more about the value that his firm provides in the real estate marketplace. Now to your host, Tim Harris.
So, Rick Sharga, welcome to today's radio show. I appreciate you being my co-host. So I certainly know who you are, and I'm sure a lot of our listeners know who you are because they are familiar with seeing you on TV pretty much constantly, especially during the real estate bust. I would say that you had and have had become somewhat of a celebrity in the real estate space, which must have been somewhat of an interesting experience for you. Are you kind of glad that the market's kind of cooling off now so that you're not necessarily being called by so many media outlets to be on TV 24/7?
You know, I actually developed a lot of good relationships with the media over the course of the last decade or so. I am glad that I no longer have to be the voice of doom and gloom, telling everybody how bad things either are or we're about to get. So it's nice that these days when we have conversations, it's really about, the end of the foreclosure crisis or the market for housing becoming a little bit more normal. So I still enjoy the conversations, and I enjoy them much more now that I don't have to tell people that we're just about at the end of the world.
Yeah, exactly. I appreciate that more than you can know. So a little bit about your prior to being part of, for those listeners who for some reason don't know who you are, can you just give them a little background on what I know you have a ridiculously long resume, but you were with previous companies that were reporting foreclosure data, so I got you started there. So let them know a little bit about your resume.
Yeah, so really, before all of that, I spent about 20 years doing marketing for technology companies. And one of the technology companies that I was doing some work for was a startup called RealtyTrack. And I joined the company back in the early part of the 2000s and came on board for what was supposed to be a 6-month engagement to help the company get up and running, and wound up staying there for about 9 years. And during that time, we began publishing the probably most widely regarded foreclosure data and monthly foreclosure report in the country. So I spent, as I said, about 9 years with RealtyTrack, running the data operations, running marketing, and moved from there to a company called Carrington Holding Company, which owns and operates about 16 different businesses in just about every aspect of the residential real estate market that you can imagine. Mortgage origination business, mortgage servicing, a real estate brokerage, property preservation and field services company, and so forth and so on. And was happily ensconced there for a couple of years when I got a call from Auction.com and joined that company about a year and a half ago. And it was an interesting opportunity from two perspectives for me. One was that it is a real estate company leveraging technology, so it was a chance for me to marry both halves of my career together, the technology and the real estate side. And the other is that Auction.com was doing what we'd always wanted to do at RealtyTrack, but never quite crossed the goal line to do, which was actually buying and selling properties online. And my first year with the company was last year, and we finished the year having sold about 35,000 properties online. So I always believed that it was inevitable that people would buy and sell properties online, and Auction.com is, I believe, far out ahead of the rest of the field in being able to execute that.
Well, absolutely. Julie and I purchased properties through Auctions.com, and it's amazingly painless. That's and definitely Auctions.com is I don't even think they have a competitor as far as the workflow that they have when you're doing business with them from a purchaser's perspective. So what was it? It wasn't too long ago, this year, I think, maybe earlier this year, that Google Capital made a sizable investment in auctions.com. So with all the listing portals out there, we talk a lot on the show about Zillow and Trulia and Realtor.com. Why did Google pick auctions.com for its investment?
Well, it's funny you mentioned Zillow and Trulia because those are both very good business partners of ours. And they are both about as good as it gets at delivering very useful information to people that are interested in buying and selling real estate. Big difference with us compared to Zillow, Trulia, Realtor.com is we're a transactional site. So we're Google might be a good place to go look for information about things you're interested in buying. An Amazon.com or an eBay, which is probably a closer model to ours, are where consumers will go to buy things. And so that's really the big distinction between Zillow and Trulia and auction.com is that you go to look for real estate on their sites, you go to buy real estate on auction.com. As to why Google was interested in us, Google Capital, which is the part of Google that invested in us, is a company that looks at late stage investments in companies that address very large markets and have a chance to be sort of disruptive in a positive way in those markets. Real estate in the United States is about $1.5 trillion annual marketplace. We are a later stage company, and clearly what we're doing can be conceived or perceived as somewhat disruptive of the status quo. So I think we've met their criteria, and we couldn't ask for a better strategic partner than the one we have.
Well, other than the obvious fact that auctions.com is the segment leader, why did Google Capital decide to invest now? Why was it, I don't know if there's an answer to this, but is Google looking, of course, this is what all the residential realtors are fearful of, so you know where I'm going with this question. Is Google looking to disintermediate, you want to just cut to it? Is Google looking to get into the real estate space in the same manner auctions.com has, for the sake of creating an alternative to the traditional way that buy and sell real estate? So we just cut to it?
Yeah. So let me answer that two ways. It's a good question. I think it's a fair question, and it's actually kind of an obvious question if you're following the space. So let me say first off, I can't really speak for Google. I don't know exactly what their plans are, but what I do know is that they have all of Google Capital's investments have been in very large addressable markets. So, they've invested in companies like Credit Karma, who's in the credit card space. They've invested in research operations, in the educational market, and in real estate. So I don't think they intend to become the next credit card company or the next educational company. And similarly, I'd be surprised if they decided to become the next real estate company. That's simply not their business model. In terms of disintermediation, I think it's important to note that about 90% of the transactions done on auction.com involve a real estate professional, at least on one side of the deal, and very often in both. So this isn't necessarily about disintermediating an agent or a broker from the equation. It's about optimizing the experience, making it a more efficient process, a quicker process, a less painful process for everybody involved. We could conceivably at some point be dealing with people who want to sell their properties on their own without any help, and we'd probably be a pretty good platform for that. But our plan going forward, especially as we move from the distressed real estate market into more traditional markets, is to partner with forward-looking brokers who understand that we can actually accelerate their business for them and create a better user experience for buyers and sellers. So it's not that auction.com's business model is to eradicate the realtor. Far from it. We're actually looking for good ones to partner with.
Well, so help me out understand what you just said. It sounds to me like you just proposed that auctions.com wants to work directly with brokers and obviously successful agents. And it sounds like a CRM type project, or am I trying to put that into a shoebox more than it really is?
Yeah, I can see where you go there, but I don't think I categorize what we're doing as a CRM project. I think really what we have is a platform that allows us to get global exposure for properties almost instantaneously. So we're a really powerful marketing engine to try and help people move their properties. We're a great place, as you mentioned earlier, for buyers to find properties that they're really interested in. And be able to execute on them in a timely manner. And as a buyer, you know that you're never going to lose out on a property that you would have been willing to pay $1,000 or a couple $1,000s more for in some sort of closed, sealed envelope, behind the firewall kind of deal. We're an open auction, so people who are interested in buying can see something right down to the last second and make a determination whether or not they're willing to pay what the market takes. So we take a lot of the negotiating pain out of the process. We take a lot of the marketing pain out of the process. We can even do most of the closing work online, and ultimately we should be able to do even more of that. So we're really good at those aspects of the business. I think where realtors and agents and brokers come to play is they're good local market experts. They're very good at the personal touch that's very often needed, especially when you're dealing with traditional home buyers and home sellers who need a little bit of hand-holding more than what they might be able to get on a website. And so we really think there's a hybrid model that'll benefit everybody involved and let everybody focus on what they do best.
Does AuctionCom have any plans to market directly to consumers?
At the moment, we're really focusing on some other strategies. That's again a really good question. We don't think our platform at the moment is user friendly enough to start taking one-off consumer properties onto the website and market them effectively. So what we're focusing on right now is, as you know, we sell both commercial and residential properties. Virtually all of our residential properties are distressed properties, either bank-owned properties or properties in some stage of foreclosure. So we're working on capturing a larger share of that market and moving more properties that are what we call retail ready in the distressed space. So these aren't properties that are, tear downs or need, a massive amount of work to get ready to sell. These are properties that are really pretty much like traditional homes. They just happen to be owned by banks. And then in the commercial market, we're focusing on selling less distressed and more traditional non-distressed properties. And right now, about 40% of our commercial sales are non-distressed traditional commercial properties. So we're growing pretty rapidly there. Once we get both of those initiatives nailed down, and we really feel that our platform is as friendly as possible, then I think it'll be time for us to open the doors and sell more non-distressed residential properties. But personally, I think the smart way for us to enter that market would be to partner with some brokers who get the listings and then put them on auction.com rather than dealing one-on-one with 5 million potential home sellers every year.
Yeah, absolutely. Well, of course, in other parts of the world, they do. Well, Australia comes to mind. I'm sure you know that how they sell property down there. It's essentially always an auction. Well, most times it's an auction format where a seller chooses a listing broker, but the listing broker is going to sell it in an auction type format opposed to the way. So there is a large proven business model around having. I mean, I can see where you'd be going on a listing appointment and you'd be talking to a seller and you propose the seller go this traditional route or they can go the auction route, and you guys would be the backbone for that alternative. I can see that being viable. There's definitely an opportunity there. Sure, I'm sure there is.
It's funny. It's funny you mentioned Australia because both of our founders, Jeff Frieden and Rob Friedman, spent time before they launched the company in Australia and New Zealand working with and learning from some of the companies that do conduct residential real estate auctions. So in our country, historically, auctions have either been used to move distressed properties or they've been used to market ultra high-end, very unique properties that had limited potential buyers. They really haven't been used that much in the mainstream, but I agree with you, and I think that ultimately is where our model goes as an alternative as a way for maybe certain brokerages to differentiate themselves from their competition by being able to offer that as an added benefit to their clients.
So knowing that our 50,000 listeners are mostly realtors, I can see from a listing agent's perspective how this would be a valuable potential tool when you guys get around to offering it. From a buyer agent's perspective, this could be very disruptive. No two ways about it. Going back to one of the premises of this radio show, learn how to be a listing agent. All right, so
but let me make a point because I think it's important for your audience to understand this. The agents who can work with us most effectively right now are probably buyer's agents. Many of the properties on our website today do have a co-op arrangement or some sort of referral fee that's available to buyer's agents who bring in their clients. It's important also for those buyer's agents to make sure their client registers them with us as the buyer's agent, so that if the client successfully bids on and buys a property from us, they get the compensation needed. But there are a lot of markets where we are really looking for buyer's agents to work with today because they're hard to market properties in some markets where it's hard to find buyers for these properties, and we value the input and the help we can get from buyer's agents even today.
I would think that ultimately, Rick, the biggest obstacle to entering in to non-distressed space in this industry, and I'm sure you already know this, is getting past the notion that that auctions are only for distressed real estate. Because, it is kind of funny, I hadn't really thought about that. But auctions are used to sell distressed stuff, and they're used to sell really high-end stuff. But there's not really, other than eBay, there's not really a formalized way to sell anything in the middle. And yeah, there's obviously, huge opportunity there. So I can kind of see a future that, our listeners have a tendency to be very entrepreneurial. So you guys can start wrapping this around your brains. And I would expect that if auctions.com doesn't propose something formal like this, somebody else will, or maybe it'll be one of our listeners. So things to keep in mind. Rick, one of the things
good.
Sorry.
No, go ahead.
I can ask you. You have, I think, a handle on, especially your experience with Carrington. I don't know how much you're really paying attention to this as much as you used to, but I always enjoyed listening to what you had to say when I watch you or read, on TV or watch you, something on the internet or whatnot. You had an understanding of the direction of the market that was more in depth than the usual real estate observer. I'm curious, where do you see, if you don't mind just kind of sharing a national forecast, if there is such a thing, is the real estate market in a corrective cycle, or is it still market by market?
Well, it sounds like a cliche, but real estate, to a certain extent, is always going to be market by market. And so, what I always say is local results may vary. What I can tell you is from my perspective on a national basis, I think 2015 is going to look an awful lot like 2014. I think what happened was we had an enormous boom and bust cycle that was probably unlike anything we've ever had before. And we've had government intervention in a way that we've also never seen before. That government intervention kept the downside from being even worse than it was, but has extended the length of time it's taken the market to recover by an extraordinary amount of time. So we're still in recovery mode, and although prices have climbed back up in many markets, nationally we're back up to about where we were in 2004. So essentially 10 years of market activity have vanished. And we're now getting to a point where prices have recovered enough that we're hitting some affordability issues in certain markets. And so we're starting to see things slow down. So we'll probably finish this year with somewhere between 4.9 and 5.1 million residential homes sold. My forecast for next year is that we'll probably sell between 4.9 and 5.1 million again. And that home prices nationally will probably only go up between 3 and 4% in 2015. Weak demand, the unemployment numbers are a little bit of an illusion in that there are probably about 3 million potential employees who have voted themselves off the island and don't count in the figures anymore. So the unemployment numbers are a little bit misleading if you look at it from that perspective, and an awful high percentage of people who are employed or working in part-time or temporary jobs and not inclined to buy a house. So demand is going to be a little weak. What will prop up the market a bit next year is that supply is also very weak, so there's limited inventory to buy. But I think next year looks a lot like this year. Prices will go up marginally. Sales will be about the same. Construction probably won't be booming in the single-family market. So it's if you're in the space, it's better than it was at the pits of the downturn, but we're not anywhere near where we were at the peak of the boom either.
A lot of folks in the residential industry are hanging their hats on the idea that Generation Y is going to be essentially, there are obviously more of them than there were baby boomers, and there's going to go, those folks are entering into their family formation stages. But then we see other reports that are saying, those folks are putting off buying property. They're putting off following that more traditional path. Are you seeing any evidence that Generation Y is going to completely surprise everyone and be the biggest consumers of real estate ever? Or do you see that trend as sort of them staying long-term tenants?
That's a really good question. Most of the research that I see suggests that the overwhelming majority of renters still want to be homeowners at some point. But the numbers have actually come down a little bit. Historically, those numbers have been in the low 80% range. Now they're in the high 70s, and that doesn't sound like much, but over the length of time of the buying life cycle of those people, a few percentage points makes a huge difference. I think we may be on the cusp of a structural change in the marketplace. It's looked like maybe we were going through a cycle for a while, but I do think that the delay factor, we've seen it with the millennials. I think Gen Y is probably going to validate this. Is it's just going to take longer for future generations to move into home ownership. They're coming out of college with more debt. Their job prospects aren't quite as strong as previous generations in all cases, and in a lot of cases they're simply delaying getting married, delaying having kids, and those are life events that typically have moved people toward a home purchase. So I think eventually we'll see an overwhelming majority of these people become homeowners, and those households will inflate a bit, but I think it may take longer than what we've seen in previous generations.
So we're going to be doing a radio show coming up in the next couple of weeks about potential black swans for the real estate markets in 2015. So let's pretend you and I are preparing the outline for that upcoming radio show. What would be the things that no one's talking about that they should be maybe considering as a potential black swan?
That's a good question. What could disrupt the real estate market next year? Sorry?
I'll tell you what I have on my list so far.
Okay.
A spike in interest rates rising. That's something that obviously could or couldn't happen, but just depend. We've had different economists on the radio show. We've had different, folks offering opinions on that. So that the consensus seems to be they're going up, but no one knows by how much they're going up. The other variable that we've heard people expressing concern about was the availability of mortgages. And when Ben Bernanke got declined on a refinance, that kind of indicates that maybe.
Right.
I mean, who knows? Maybe the guy doesn't pay his bills. I mean, I don't know. And I'll tell you this other one I heard recently, which not recently, this year, that was very interesting. Evidently, there's a company that is in they're beyond formation. They're getting ready to launch, and they've got some massive investment behind them, and they are going to go directly to consumers, and they are going to be offering some sort of online valuation widget that if you accept their valuation, they'll basically buy your house from you and close within like 2 weeks or something like that. So, and I've heard from 3 or 4 reasonably reliable sources that in essence is their business model. What they do with the real estate after they buy it just, I have no idea. But there supposedly is going to be a company that's going to start test marketing in certain parts of the country that's based out of California that they're going to be doing just that. So that would be a potential black swan. Anything else that you've heard of that maybe our listeners should be preparing for? Worst case scenario?
Well, the last black swan, I would tell your listeners not to be too concerned about. I'm very familiar with the company that you mentioned, and they're launching at a very odd time for their business model. They're basically looking to make an 8% profit on all those properties that they buy, which means they're going to have to buy those properties below market value. That's difficult to do in a seller's market, which is where we are in most parts of the country right now. And the other thing your listeners should know is that their plan is to buy those properties and then sell them to local brokers. So there's an opportunity there. I think the two things you identified earlier are very interesting. I've been predicting that interest rates would go up for several years. I'm going to keep predicting it until eventually I'm right. I don't know if it actually will be 2015 though. Only because there's so many other pressures globally on the economy that I'm not sure if the Fed can afford to let interest rates go up too high. I do think credit availability will continue to be a challenge. There are two potential issues that come out of the foreclosure market, if you will. I don't think they're going to be problems, but they're worth paying attention to. One is that the HAMP loans, the government loan modification programs for distressed borrowers, are going to start to reset over the next year to 2 years. So we'll see interest rates go up by a point for some of the people whose loans have been modified through that government program. There are some people predicting that we'll see a lot of defaults from those. I'm not one of them, but you can keep an eye on that. The other is that billions of dollars of home equity lines of credit are also due to start resetting. And in some cases, people will go from paying interest only to principal and interest and could see their monthly payments go up by $200 or $300 a month. That could be enough to send, on the home equity loans. So those are two things that could be a little disruptive. I don't think either are going to be major problems, but they're outliers that people can keep their eyes on.
Do you think there's any chance, because you're in this world, you still are really with auctions.com. Do you think there's any chance that some of these big institutional investors will just kind of sour on their real estate bets and decide to, just start dumping properties? That's another big fear I hear amongst agents, especially in the hardest hit markets.
That's the longest running rumor I've heard probably since Paul McCartney being dead in the Beatles era. No, I don't. I mean, those investors, those hedge funds, don't get where they are by losing money on transactions. I do think we're going to start to see some of those properties divested. But what's happening so far is they're selling off portfolios to other investors. So no, I do think the business model has changed, and we've seen the biggest hedge funds start to back off in terms of what they buy, but now they're offering financing. We're also seeing them form securities. We're seeing them form public REITs, and neither of those is something you do if you're looking at a short-term hold. Those, by definition, make you hold on to the underlying collateral for longer periods of time. So no, I think we're still seeing a lot of interest from investors. I think the biggest of the big investors are scaling back and will ultimately stop buying, but I don't expect to see fire sales of portfolios of properties that they bought anytime soon.
Very interesting. So again, I mean, Rick's now touching on the fact that if you're a listing agent, hey, guess what? There's more potential opportunity because you can be working with some of these institutional investors. They hold properties. Well, guess what? Sometimes they'll be wanting to sell some of those properties, replace them with better performing properties. Who knows? So keep your eye, agents, to all the opportunities that this new market creates, because there's not one, there's just dozens and dozens. So speaking of opportunities, Rick, our listeners, if they wanted to engage with auctions.com, I heard you say, obviously, you guys, and I can attest to this because I've worked with you directly before, the company, buying properties for ourselves, that it's very easy to work with, just a super painless, almost surprisingly easy way to help your buyers or you personally purchase properties. Are there any other ways that you can think our listeners can work with you guys?
Right now, I think we're a good source for your agents who are working particularly with investor buyers. to scout for properties, to do some market analysis for what's going on in their various markets. I would encourage you to stay tuned to what we're doing over the course of the next 6 months or so, because we're formalizing, putting together some agent programs that will also be working and useful for listing agents in addition to buyer's agents. So I wish I had something more definitive. Keep in mind that the company was started only back in '07, and the model was to get huge portfolios of properties from very, very large financial institutions and sell them all on Saturday. So, it was find 5,000 of your close friends, put them in the LA Convention Center, and sell off a whole bunch of properties in one day. And there really wasn't a role for agents in that model. So we're figuring it out as we go along. We're the only auction company online of our kind that's a third-party seller. The others that are out there are basically captive to loan servicing shops who are trying to move their own properties, and that are a lot more restrictive. So we're working with agents to kind of create new programs that work for everybody. And again, I would just encourage your listeners to keep their eye on what we're doing and look for the opportunities that we're going to announce over the next few months.
Well, being successful in business is all about differentiating yourself and being of service and providing, giving folks something that they want, homeowners in this case. And once you guys emerge with a consumer-facing product where agents can start maybe, or brokerages can start auctioning properties on your website, I would think that the agents and the brokers who are forward-thinking should at least have that as an option to present to their sellers. That could be huge. It really could, because it's worked in other parts of the country, other parts of the world. It's worked with selling $38 million Ferrari GTOs. It's worked with selling $38 mobile homes. There's no reason it can't work with everything else. So, Rick, are there any other questions I should have asked you that I didn't? Anything else you'd like to say to our listeners before we sign off for today?
No, I'd offer everybody the opportunity to check out what I post. I post pretty regularly on LinkedIn, and I'm also up on Twitter. Twitter handle is just @RickSharga. No, stay in touch with us, and if you have ideas for things that you think we should be doing and could make our business more attractive to agents, please let us know.
And Rick, I'd love to have you back when you're ready to roll out whatever the new product that you alluded to from auctions.com sometime in the next 6 months. So, reach out to us or we'll reach out to you. In the meantime, I really appreciate you being my co-host today, and thank you for being part of Real Estate Coaching Radio.
It was a pleasure doing this with you, and look forward to doing it again.
Thank you.